we want to welcome in Treasury Secretary Scott Bessent. Mr. Secretary, nice to see you.
Hi, good to see you.
I want to bring up the markets initially because I think it's all connected to the big, beautiful bill. The NASDAQ, the S&P, both setting records today. And I know that you built a long, successful career listening to the markets and not Wall Street economists or the CBO. What did the market tell you today?
Look, the markets have been telling us this for a long time, and it's not just the stock market, it's the bond market. Markets live in the future, and markets anticipated that this bill was going to pass. Markets understand the non-inflationary growth that we're going to get here. So just so all your viewers understand, after the panic over the tariffs in April, I call it tariff derangement syndrome. After that panic, we had the fastest recovery from a 15% drawdown in history. The stock market set a new high, and then the bond market, which I watch like a hawk, had its best 6 months in the past 5 years. So bond markets like this, they think, as the Speaker Johnson said, we are going to right our fiscal ship, and stock markets like growth. So this is a great combination of growth with fiscal restraint.
Mr. Secretary, everyone had their say in this bill, in the House, in the Senate. It got done in the end. But can you talk about President Trump's leadership in getting this bill over the finish line, with Speaker Johnson, of course, and Leader Thune?
Well, this is what leadership looks like. President Trump, as Speaker Johnson said, may be the most engaged president in history. He had a number of senators out on the golf course all weekend. Last weekend, he was making calls and holding individual meetings. And I got to tell you, too, is the House Freedom Caucus, who were the last to come on board, they should be very proud. They changed the center of gravity for this town in terms of big spending to now we've got growth without the big spending. So, look, it was not a straight line, but I could not be more excited about where we ended here in terms of both growth and a great fiscal trajectory.
I want to ask you just about where we are. We're at almost the 6-month mark of Donald Trump's second term. Gas nationwide is at its lowest level since the last time Donald Trump was president. The jobs report today beating expectations. The Dow is at almost 45,000. We talked about the S&P and the NASDAQ. Inflation is falling 2.4%. We're close to peace deals on 3 fronts: Ukraine, Gaza, Iran. We have a peace deal with Rwanda and the Congo. The Waffle House even removed their 50-cent surcharge on eggs. So things are going much better than they were 6 months ago. Let me ask you, just as Treasury Secretary, where are we 6 months from now?
I can't tell you how excited I am, because I think on Monday, everyone's going to take a break tomorrow to celebrate the 4th. On Monday, I think the pent-up demand that business leaders have been holding back until they got the certainty from this tax bill is going to start making its way into the economy.
Yeah.
As I've said many times, President Trump's economic agenda is a 3-legged stool. It's trade, it's taxes, and it's deregulation. So we're landing the trade deals. Those are coming in. I can't even describe the inroads we're making against this unfair trade that's gone on for decades. We passed the tax bill on July 4th. President Trump, Leader Thune, Speaker Johnson, incredible leadership. And probably the most underrated portion of the president's agenda is the deregulation, because that is what is going to create the supply side, which means we can have this fantastic growth without inflation.
One about Jerome Powell. So the Fed chair lowered interest rates more than once before the 2024 election. Critics say that was political. He was trying to help Kamala win the election. Do you think he's playing politics right now by refusing to lower interest rates, which are still too high?
Well, look, it's an entire board here, and my guess is that just like many other established financial types, they have overestimated the impact of tariffs on the price level. And I think that we will quickly see that there's been no inflation, and that if there were a one-time price adjustment, there's nothing more transitory than that. So I would expect that the markets are telling us we're going to see 2 interest rate cuts this year. The 2-year bonds are telling us that the Fed should be cutting. So I would expect that the longer they wait, the bigger the first cut's going to have to be.
Okay. Mr. Secretary, thanks so much for being with us tonight. Congratulations on the win today. More to come, we hope. Thank you. Scott Bessent.
Good to see you.
Great to see you as well.